Hi, my name is Mark Longo, founder and CEO of the Optionsinsider.com as well as the Options Insider Radio Network. And I'm here today to talk to you about two interesting ways to play the video game sector, in particular Activision-Blizzard, ticker symbol ATVI. Now, many of you may know Activision because they're one of the largest video game publishers in the world, and they're the creators of the mega hit World of Warcraft franchise. Now, despite their recent successes, their parent company, Vivendi Universal, is looking to spin off or divest them. So that poses an interesting question for traders of Blizzard, particularly because Activision-Blizzard has been particularly range-bound over the past few years. It spent most of the past 2 years vacillating between the $11 and $13 prices in their stock. So it's been very range-bound, and right now it's trading almost exactly around $12. So if you are an options trader and if you have a particular outlook on ATVI, here are two interesting ways to use options to play that. Now, let's say you feel that this announcement is going to be bullish for Activision in the long term, but you're not sure exactly when. You want to give yourself a little bit of wiggle room, but you still want to establish that bullish position. Well, one way you can do that is with what's called a risk reversal, which is a position where you, in this case, a bullish risk reversal, you buy an out-of-the-money call and you pair it with an out-of-the-money put, all in the same expiration month. So in our example, because we're not precisely sure when this event might take place, we want to give ourselves a little bit of wiggle room. We're going to look at the November 13 calls. These are trading right now for about 42 cents. So you can go out and purchase this call for 42 cents, and then because we're trading a risk reversal, turn around and then also sell, because remember, it is range bound primarily in that 11 to 13 range, selling the November 11 put, which is also trading for around 42 cents. Now, if it's executed properly, you can do this trade because the two options are at exactly identical prices for essentially zero outlay for your trading account minus commissions and things like that. So that's a very low cost way to establish a bullish position in Activision Blizzard. Now, how can this trade play out? Well, there's a couple of different ways. If Activision does decide to break out of its range to the north and rally above the 13 strike, then this position is poised to make money as the stock rallies and as Activision moves up. Now, on the flip side, if Activision does drop after this news is announced and the news turns out to be bearish for Activision, then you will be buying the stock for the effective price of $11, which, remember, is where you sold the put on the November 11 strike. Now, remember, that is a substantial discount to where the stock is currently trading, and also essentially a very desirable level for anyone who's bullish in Activision on the long term. So that's the bullish risk reversal. But let's say you have the opposite opinion. Let's say you think this news is going to be bearish for Activision in the long term. We can take that same trade, that same risk reversal, and turn it around. And instead of buying the November 13 calls, we're going to sell them again for around 42 cents, which is where they're currently trading. And instead of selling the November 11 put, we're going to buy it again for 42 cents. Now, that gives you the same net outlay, which is roughly zero for that trade, but now you've established a bearish position where if the underlying, in this case Activision, drops and starts dropping substantially below 11 by November expiration, then you are poised to profit tremendously from that trade. On the flip side, if Activision rallies much beyond 13, then you will begin losing money at the 13 level because you have effectively agreed to sell Activision at 13. So those are two interesting ways to play Activision. It should be noted that if Activision does stay range-bound through November expiration, then both of these trades will expire worthless. But then again, you had a very minimal outlay to begin with these trades, so your risk is very small. And it certainly is preferable to the capital outlay required to buy the stock or short it for your trading account. So that, again, to recap, two interesting ways to use options with either a bullish or a bearish risk reversal to trade ATVI. My name again was Mark Longo from the Optionsinsider.com, and thanks for watching.